What's up, everybody? Welcome to another episode of Swan Signal Live. I'm your host, Sam Callahan, Senior Analyst at Swan Bitcoin. Before we get into the show, I want to bring up some of our partners, and that the first one is Marathon Digital Holdings, which is the largest and most technologically advanced publicly Bitcoin miner, as well as the most energy efficient. Marathon's primary mission is to enhance the Bitcoin network by increasing the hash rate to help make it the Bitcoin the world's most decentralized and secure monetary network. So check it out, Marathon Digital Holdings, as well as Cloaked Wireless, SIM swaps. These things can be really harmful for Bitcoiners. I've seen it happen time and time again. And Cloaked Wireless provides the best protection against SIM swaps. So whether it's to secure your primary phone number or a secondary device, everyone should protect themselves from SIM swap attacks by using Cloaked Wireless. You can get Swan right now and get 25% off by using that promo code. So check it out at the QR code right below. Today, we're going to be talking about Bitcoin venture investing, what the future of Bitcoin looks like, envisioning the futures. That's the job of VCs, and to help support builders in the ecosystem by providing expertise, knowledge, and of course, capital to help them build the products of the future to help scale Bitcoin and push Bitcoin adoption. And today we have two Bitcoin venture capitalists with us, as well as two authors. We have Alan Farrington. He's the co-founder of Axiom, as well as the author of Bitcoin is Venice, as well as Eric Yakes. He's the author of The Seventh Property, as well as the co-founder of Epoch. So welcome, guys. I mean, we were talking in BTC Prague, and so happy that we were able to put this together.
Yeah, thanks, Sam. Great to be here.
Yeah, the introductions were funny. It just kind of made me realize from like a bullet point perspective how similar Alan and I are. Which is kind of funny to hear.
How cliched we are.
Author, shit posters.
Yeah.
Bitcoin VC.
I realized something even
budget Alan
more than that, by the way, that when the ad thing was up while we were waiting to come on, I need a new headshot like so badly. That picture that you have is I've aged. That was at least one cycle ago.
Yeah. Well, you look good in person when we were hanging out.
Thank you. That's very kind of you to say. Very kind of you to lie to your audience about that. I appreciate it.
Well, we were hanging out and we were talking, and first off, what did you guys think of BTC Prague? Just some takeaways. I know it was a couple weeks ago, but I had a great time. I thought it
was great. Yeah, I really enjoyed it.
Super loud.
It's nice for me that I don't actually have to go that far to get there. I don't know. Probably doesn't apply to you guys at all, but I'm speaking of which, obviously headed to Nashville imminently, which is really far away for me. So Prague's nice. Prague's close.
Yeah,
Prague was cool. I mean, the event was very well organized. Honestly, my favorite part was the food in the speaker section. Yeah. That food was amazing. I was looking forward every day to just eating there. That was awesome.
Agreed. Well, you guys were on a panel, and you guys were talking about Bitcoin venture, and maybe we could kick it off a little bit. I think both of you guys really focus on the early stages, right? When you're investing in any kind of company or founder. What do you guys look for before you invest in a company? Because at that stage, you don't really have like objective measures to really look at. I mean, it's really early. Sometimes they have like a proof of concept. Sometimes it's just very early days. And so it can be difficult for an investor to decide, is this business worth investing in? What are some of the things you guys look for? Maybe throw it to Alan and then throw it to Eric afterwards.
Yeah, sure. To be honest, it's really hard to answer completely in general. I think you kind of alluded to this in the question, right? That it's so early stage, not just from our point of view, but like more importantly, in the process of building these companies, like a lot of the time that frankly the valuations they're going for, they kind of have to just put their finger in the air because there's nothing you can, there's no sensible metrics that you can really use for the very first external funding a company gets. One thing I will say though, that actually does apply pretty much across the board. I mean, it won't apply to every single company that we look at, but it's more like if we come across this, we actually get very excited. We won't invest solely on the basis of this, but it's a like a green flag, let's say. It's that a company is putting forward some idea. It doesn't even need to exist yet, right? It can be purely theoretical. It can maybe be a kind of prototype stage, but where it's using Bitcoin, like that obviously has to be relevant for us to consider getting involved. It's using Bitcoin, but to provide something, some good, some service that just wouldn't be possible without Bitcoin. So from our point of view, we can justify the contribution beyond just our fund as being that it's actually extending the utility of Bitcoin as a whole, which I would argue is probably the best way of contributing to Bitcoin being normalized anyway. Like, that's a really easy way of orange pilling people. If, for the sake of arguments, that you've tried every traditional trick and they're not getting it right. You've told them to read the Bitcoin standards, you've told them to read the seventh property, right? And it's not really syncing why we need permissionless open source sound money. But then it turns out they've been using and even paying for some service that couldn't exist without Bitcoin. That, I think, is really valuable to at least get them kind of intrigued to then go further down the rabbit hole. But I think the coolest thing, if this exists, is if the service that is relying on Bitcoin can actually be provided in such a way that the end user doesn't need to know that Bitcoin is involved. That doesn't mean that the company goes out their way to obscure that Bitcoin is involved, just that they can provide something that the end user doesn't need to already be a Bitcoiner to appreciate. And in a lot of the cases that do more or less fit this bill, it can get more interesting than that, in that maybe if you do know a bit more about Bitcoin, you can start to you can make even more of the service, right? You can get involved and like tweak the parameters that are relevant to your use case. But just at a higher level as kind of a starting point, if the customer doesn't need to already be a Bitcoiner, right? Doesn't need to intimately understand the inner workings of, Bitcoin or Lightning or NOS or whatever, that's very, very attractive. For the reason I just gave around orange pilling, but maybe even more straightforward, like that's kind of an ideological reason. A far more practical reason is just that, we say we're so early a lot as like a reason to be bullish. The inverse of that, though, is there's the market for people who don't understand Bitcoin is significantly larger than the market for people who do. So, from the perspective of effectively early, like super early stage tech investing, you want as big a market as possible. So that's always exciting if we stumble across that.
Yeah, absolutely. I think because what Alan just described is effectively a market dynamic where you don't have competition yet, and it's a much larger market. I think, like, to your point about as you go earlier, what you're focusing on, the more that the model, the market, the competitive environment becomes uncertain, the greater your dependency is on understanding the team and their potential, because products change, ideas change, markets change. All these variables are highly complex, and in the early stages, it's it's something that's going to be highly variable. Having a team and a founder that you can feel very comfortable with their judgment and have the relevant experience to where they have seen these types of environments before and they know how to operate and, efficiently make decisions in them. That's one of the primary things that we'd be looking for as we go earlier stage.
Yeah.
As a business matures, it's not that becomes necessarily less relevant, but we do get more certainty around other dynamics to depend on, where we might say, like, okay, they've already made it through a few hoops that, would have been much more challenging in the prior financing rounds. But now that they're here and they're much more established, we have a bit more certainty around that. But I think, like, what goes into in the earliest stages of founders, it's, having this prior relevant experience, particularly, it's really easy to get idealistic about what that could mean. But generally speaking, prior startup experience of, starting from zero, bringing a company to scale and having some sort of exit, that would be optimal, particularly within the particular industry niche that they're looking at, which in Bitcoin is challenging because there's definitely overlap with plenty of industries. But referring to, like, Alan's point, if we're bringing about a novel product that's addressing a broader market that just hasn't been seen yet, then applying prior experience is relevant in many ways, but it's also uncharted territory. And that's definitely something that's, so it's somewhat of a double-edged sword in certain scenarios as well. But yeah.
So at that, you're kind of investing in the people in a lot of ways, right?
Yeah.
At those early stages. I figure, like, a lot of the job too is not just what to invest in or who to invest in, but also what not to invest in, right? You guys kind of get pitched a lot of things. What are some red flags, and how much does timing come into play here? Because that's another factor you guys have to take in. Like, where are we in Bitcoin's adoption? You know, when am I going to have any kind of return on my investment? Is this 5 years? Is this in 10 years? You know, how does that come into play in terms of thinking about both the timing and Bitcoin adoption, where we are in that cycle, but also, you know, when am I actually going to see a return on this investment here for my LPs? You know, how does that come into play in terms of what you're investing in and what not you're investing in?
Yeah. I have a super obvious answer to this. I almost feel compelled to apologize to Eric in advance in case he was going to say something similar. So you have the time I'm speaking to think something else, Eric. For us, by far red flags may be a bit strong. It's more just something that we see very consistently. It's by far the most common reason that we would pass on something. Or I guess maybe it is a red flag in that case. I'm just trying to not be too harsh to, you know, all the founders in question. It's that whatever the product or service is, usually implicitly, like they rarely actually come out and say this because it would be a bit more obviously a bad idea in that case. It kind of assumes that we've already hyper Bitcoinized. Like, it would make a lot more sense in something like 30 to 50 years. But the problem, this links to my previous answer as well, that the addressable market is really just the founder and their friends. And that's nice. Like, it's good in some sense. It's tricky to discourage this too heavily as well, because this is kind of a cliche in venture investing, that, or just in like early stage tech in general, that you should be tackling problems you have yourself, because then you know how to solve them. In Bitcoin in particular, that's very much a double-edged sword, because it's not at all guaranteed that anyone else will have that problem, or that anywhere near enough people will also have that problem. So it's not, maybe I will actually roll back a little bit, that it's not necessarily a red flag, because that heuristic is still a useful one, but it is by far the most common reason that we pass, because we just don't see, like, we can't make a plausible case that the business will have enough of a market to generate a return that would satisfy us. I think that's the other thing too. It doesn't necessarily mean it's a bad business. It probably just means, maybe to your second point, Sam, right? It's about timing. It's not the right timing, at least for venture investment. Maybe a lot of these businesses would be better, frankly, just funding like with the founder's own money or with family and friends, and adjusting their expectations of like how explosively are they going to grow in line with, you know, more of a Silicon Valley stereotype, when in fact the market required to do that just doesn't exist yet.
Yeah, I completely agree. I think a lot of it stems from, and you know, I totally get this, because I love talking about all the long-term philosophical, big idea type things. Al and I are actually, I think we made this point on the stage in Prague, but a lot of founders will like start at some sort of long-term philosophical idea and then try to like back into a product from that. It seems like, when really, to Alan's point, like starting with a pain point and working from there, more of like a bottom-up approach seems to make a lot of sense. I think, like, also building on that, there's the way that we view a lot of things within the timing and adoption phase in like a broader sense, is that, you know, we're thinking about this in Bitcoin adoption from the point of, you know, inception to hyper Bitcoinization in the year 2050. There's going to be like 3 primary cycles of adoption focused on different monetary functions. This isn't like a scientific way of describing it. This is just like a general idea of like, we're in the store value phase and we're capturing market share within that phase. And then, you know, a lot of the medium of exchange, unit of account adoption is predicated upon the growth of store value, with the way that we think about how a money would fundamentally build in a private market. In considering that, I think that there's founders who will focus, to Alan's point, on more like medium of exchange type functions. And we look at that as pretty premature. It doesn't mean that using Bitcoin to move and settle as collateral isn't highly valuable and relevant today, but we don't view that as quite the same idea. And the store value type functions, when it comes to markets that are associated with that, you know, on-ramps, lending, remittance payments, all these different just basic financial service categories that are giving people access to, to the ecosystem in one way, shape, or form, those are solving direct pain points today. And just because it's not necessarily novel doesn't mean that it isn't incremental to the ecosystem, because there's one of the things that's very unique about this industry is that it's highly global and distributed. And the relevance of a business being replicated from one jurisdiction or geography to another, it means that there's quite a bit of defensibility that can emerge around those business models because of it. And I think that that's something that we look for. But anyways, to answer your question on red flags, I think one of the biggest things when we're dealing with uncertainty in the early stages is some founders that are taking a very authentic approach towards their strategy. I think that that's one of the biggest things when I view the long-term relationship as a partnership with another founder, and I feel like I'm sitting on a sales call, then it's something that doesn't help me garner as much trust in how that relationship will unfold over time. I think in the earlier stages, finding someone who's effective at selling me in a more authentic way that can communicate where the bodies are buried, as well as, how thoughtful they're being about the very real uncertainty that exists in their business model. That's something that gives us a lot more trust that this is somebody we can partner and reason with. And often I think you'll see founders jump into effectively a sales pitch, and they want to make, and not to say it doesn't work. I think it does work in many scenarios. Just doesn't really work that well with us. But, I think they're trying to describe something that departs from reality a bit. And that's one of the biggest red flags, where it's just like, well, if I don't know what I'm being told is necessarily the case, then it's a lot harder for us to build that confidence over time.
Yeah. Yeah, I love what you said on stage at BTC Prague, where you look for like alignment basically between like their expectations, their roadmap, where they have clear milestones. I think that makes a lot of sense. If you're investing in a person, a team, they have a clear roadmap of how they're going to get to their like lofty goals in the future. And so we talked a little bit about like how you decide who to invest in. Now let's shift to what, because the ecosystem has grown. There's lots of different areas within the Bitcoin ecosystem that you could choose to invest in. So I was wondering if we could just like kind of hit certain ones. And the first one is Lightning, because the narrative you hear a lot from some people is, Lightning is dead. That's, Lightning has failed. That's what you see. You hear that a lot. And first off, I guess let's just say, how would you respond to that critique? Lightning is dead. Lightning has failed. Let's throw it to Alan.
Right. So I don't think Lightning has failed at all. I think Lightning is unbelievable and basically magic. However, I think it attracted a narrative that wasn't helpful, was overly broad, which behind the scenes, as far as I can tell, almost everybody disagreed with. But there's, a social pressure, I guess, to it, not to like lie in championing it necessarily, but at least not to be perceived as fudding Lightning, which I think is probably why it got a little bit out of hand. Along the lines of like, this just solves everything, right? Like payments is solved by Lightning. We're done now. We just need to wait for Lightning itself to scale, something like that. And as the Lightning network has in fact scaled very nicely, it's just become more obvious what is and isn't a good use case for it. But a lot of that, arguably all of it, frankly, was being said 4 or 5 years ago. It just wasn't, it just wasn't the dominant narrative, basically. So I think that narrative that that it's a panacea, it solves everything. It is how Bitcoin becomes day-to-day money for the cliche of buying the coffee or whatever. That narrative's definitely dead. Lightning itself is absolutely not dead. Again, I don't know how much detail you want me to go into in this and just like hijack the whole podcast, but Lightning's amazing.
No, I do. Let's get into it, because I hear it so much, and like I couldn't disagree more. And I think it comes from a place of impatient and, like you said, kind of like targeting Lightning as this like panacea, like just what you said.
Yeah,
but let's kind of like dig into this a little bit of why Lightning.
Yeah, sure. So I actually think it's easier to understand kind of in the negative, like where Lightning isn't useful. And this might sound a bit sort of gung-ho narrative anyway, but frankly, outside of what I'm about to describe, I think it is basically good for everything. So the two problems that Lightning has is always onlineness. You have to like turn that into a noun. That you have to be online to receive, and inbound liquidity, meaning that you have to already have money to then receive money. Combined, as it turns out, / a lot of people did actually predict this in advance. It makes it impractical for. There's quite a lot of caveats, I think, even here that you need. It makes it impractical for everyday users as opposed to merchants, so like end users who are not sufficiently technical, which is most people, and who want to use it, the quote unquote proper way, which is non-custodially. So basically, if you strip away all those caveats, you see where it is useful, which is still, frankly, in a lot of cases. It's basically just, it's not great in kind of its purest form for, I guess, replacing Visa. Like that was probably always the meme, which I find actually really interesting because this is, I didn't actually even mean to go in this direction, but I set myself up very nicely for my favorite rant about this, which is that Lightning is actually a significant improvement over Visa. It's like Visa on steroids, made amazing, provided you understand how Visa actually works in the first place, which most people don't. So this again, like I really could just keep talking for the entire rest of the episode on this. I'll try to keep this really brief. What Visa actually is a settlement layer between banks, right? No individual consumer is a customer of Visa. Banks are customers of Visa, and you as the user are a customer of banks. Basically, what Lightning does is turn that interbank settlement functionality into, firstly, a protocol rather than a company. But probably what's even more interesting and is implied by that is that it's completely open and permissionless. So you don't need to apply to the Lightning network to get a license to run a Lightning node or whatever, which is what you have to do with Visa. And I had a tweet that did fairly well. It was it just popped into my head at one point that like I'm going to apply to Visa. I'm just going to see what happens. You literally just set it up. Now, obviously, the inverse of that is what I just mentioned. That there's still pain points about this. It's not as easy as you might imagine of, I don't know, whatever you want the panacea for Bitcoin payments to be. It is still significantly involved, and it lends itself primarily, I wouldn't even say to banks, precisely because you don't need to apply, right? Like you can just do it yourself, but probably merchants at the very least, like businesses who have a mandate to, first of all, be always on as kind of a trivial condition, as opposed to a user who's, only really typically online in the sense it matters when they want to make a payment. For a business, that's trivial. And then equally, the inbound liquidity thing is kind of mind-boggling for regular people who aren't used to thinking about it, but for a business, it's just a working capital issue. Like it's also trivial. So again, with all of this in mind, with thinking about how you would actually use this in mind, it is such an unbelievable improvement over Visa that I think that's actually a really helpful way of thinking about it. The only way that you need to walk back a bit from the original narrative of like this replaces Visa is understanding what Visa actually does in the first place. So I'll stop there. I that was only like 2-3 minutes rather than the whole hour.
Okay, so you covered everything. But no, I think thinking about it in terms of like use cases of all that, when, to summarize Alan's point, if it's a business to business type application, and that's where it's going to be much more relevant than a, consumer to consumer type protocol, there's, when we apply that to it being used for settlement functions within a financial network, there isn't anything in the world that has the degree of efficiency and the degree of trust assurances or trustless assurances that you can get out of something like Lightning. And that's where I think it's highly competitive for clearing and settlement functions. I think that there's a lot of false comparisons are made against the adoption of some of these protocols. Let's take a step back. If we were using Lightning and it was, hypothetically purely integrated on a dollar system, then this would be something that would be highly relevant. Now, because there's no competition in this, highly, what's the word I'm looking for? High friction, low competition type financial system with a bunch of regulatory barriers, they'd have very minimal incentive to want to adopt something like this in the first place. But nonetheless, it's something that it's a material improvement over clearing and settlement infrastructure that exists today. And what's bottlenecking some of that adoption is just there's dependencies of Bitcoin adoption as well over time. And there could be a lot of stablecoin use cases that start to proliferate over this for that reason. And then as Bitcoin grows, it becomes more and more relevant for that function. But today there is quite a bit of adoption around that. And as I think as financial infrastructure starts to scale more, and we look at the Lightning Network as the globally optimal, open, permissionless way of settling Bitcoin, as opposed to directly interacting on chain, it's going to be vastly more efficient and still have, very strong trustless assumptions. That is highly compelling, and that's something that's at a certain point, once Bitcoin I think is scaled enough, going to have a major inflection point in terms of protocol adoption. And in the interim, that US dollar adoption through some type of stablecoin as well could bring material adoption to the network too.
Yeah, let's go into that a little bit, because it seems like eCash and Fedimint have developed like on Lightning, and they utilize Lightning, and people are using that to kind of transact more efficiently even than Lightning. And there's different trade-offs, right, to eCash versus Lightning versus using Bitcoin on the base layer. And then you brought up the stablecoin usage that could develop. Do you see those like two ecosystems of eCash and potential stablecoin usage? They're almost like competing with one another for users and activity, because at the one hand, you've got stablecoins that are trading in US dollars, and then you got like eCash over here. Do you guys see those two systems evolving? And is there any kind of like friction that could happen between the two?
I mean, the way that I look at it is Bitcoin is the money, and then there's different means of payment that are emerging, and there's going to be multiple protocols that exist to enable this whole financial system to build out. Lightning being one of them. eCash could potentially be another that emerges at scale. And ideas like ARC are also emerging as well. It's similar to in the US dollar system, where you have Fedwire is our base form of settlement, and you have SWIFT and ACH, and on top of that we have other forms of middleware applications, and then on top of all of that you basically have the credit card companies that are interacting. All US dollar based, but different means of payment are conducted for different use cases. Mm-hmm. And so like that's kind of how I see it. And I won't go down the rabbit hole of whether or not it's actual like layers or whatnot. But it's there. The way I think about all this is there are different protocols that are interacting with a particular medium of exchange. And the way that I see that is, with open protocols, you could plug technically any medium of exchange into them. So when I think about like, to your comparison with stablecoins, you can have an eCash denominated stablecoin. You can have a gold-backed, a gold-backed eCash token. You could have a, NFT. Like you could do anything you want. It's completely arbitrary, and it's just an open protocol that people can use how they want. I think our view is that eCash could potentially be, with the assumption of trust is a part of its model, the most efficient way of transferring value while also maintaining the privacy of a bearer asset in quasi-bearer asset in a digitally native function. Like that's what's incremental about eCash in a lot of ways, is that we're kind of replicating actual cash within the system of transferring it from one phone to another. So you get back with dollars. I don't necessarily view at the protocol level those being competitive. I view it more competitive with Bitcoin in the near term.
Eric made a comment there I just want to pick up on. It was kind of offhand, but I chuckled at it around not wanting to go down the rabbit hole of layers. Just to point out that if you apply the definition that I would say we're so rigorous about in Bitcoin that we end up just arguing over it highly pedantically around what even constitute a layer. If you then try to apply that in dollar fiat world is just hysterical because nothing's a layer. Everything absolutely depends 100% on the trust in whatever's below it. So even thinking about it in layers is kind of pointless, which sets up very nicely everything that Eric then said, that in Bitcoin land, you have a spectrum of exactly what trade-offs you want. And that's the bulk of why it's so appealing to begin with.
And I will caveat that statement with, I see value in the analogy of layers, because I think that helps people conceptualize it in a lot of ways. And like even in some of our like marketing materials, we use that with caveats when we're describing things. Yeah.
Well, and like you kind of mentioned this, Eric, but you talked about how, Lightning is the best way to settle collateral in like a trustless way. And you've said this before of how that's what your focus is on, like Bitcoin's use as collateral and other financial services around that. Can you maybe dig into why you're focused on that and why you think that's important to allocate to today and why you're doing that?
Right. So like what I'm focused on is I want Bitcoin to be a global neutral financial system for the first time in the world. Like that's our end goal that is going to take decades. What I think from is a capital allocator today, you have to, the way that we look at this is it's, so there is this physicist, Adrian Bijan, who created this theory / some people call it a law, others call it a theory. I'm not smart enough to know what it is, but it's called the constructal law. And the idea is that like all systems, in order to thrive, in order to continue to change over time, have to have access to the flow of a current. And that's why we see all systems that have that kind of access are built in these like tree and branch structures. And we see that in, all different forms of nature, in veins and trees and river networks and all these other different ideas. When I think about the Bitcoin ecosystem, it's a lot from that perspective. We have this growing tree that's emerging, and one branch today is going to have many other branches that are building off of it tomorrow. And when I think about where Bitcoin's at, if Bitcoin's like the trunk of it, then some of like the emerging branches are use cases on a store value type function, using Bitcoin as a form of collateral. There's other things that exist today as well, but that's something that we see as that will allow businesses to accumulate enough capital and resources in the near term to be competitive for the longer term use cases as those start to expand in like a very broad general sense.
Yeah. I really like that, actually, that physicist quote.
Thank you. That's actually a little bit of a teaser of a paper that's coming out.
Oh, nice. Yeah, no, I mean, if you view Bitcoin as the trunk, and I've actually, look, Bitcoiners love analogies.
I know. I want to be given an analogy that I can actually talk about.
But no, I've heard about Bitcoin is like water. Bitcoin should be viewed as like a liquid, right? That you like move around, so flowing between. So I totally, that hits me, man. That hits me. I can't wait for that paper. But Alan, I heard your talk at BTC Prague. Fiat is retarded.
I was wondering the reason why I didn't say the name of it on this show. I realized as soon as they put the videos up that I couldn't really tweet about, or I had to tweet about it in a sort of cryptic way, because if I use that word, then it'll just be immediately shadow banned. Like no one will see
I
it.
mean, look, we mean it in the definition of the word, dumb. Fiat is dumb.
Well, if people have seen it, they'll know I make a big deal in the talk about pretending I mean lots of other definitions as well. Yeah. just to tease it out.
Yeah. Well, I mean, I keep seeing very stupid things happen in the Fiat system, I guess you could say.
Well, if you saw my talk, then this shouldn't be a surprise.
No, it shouldn't at all. And I just saw Biden actually say that he's thinking about capping rents at 5%. And I was like, that's pretty stupid.
Yeah.
But like, let's just like go over that talk a little bit. So what inspired you? Maybe some of the takeaways that people who didn't see it.
I don't know how much of this is like supposed to be confidential. I guess they'll tweet at me angrily afterwards if so, or maybe just in Telegram. But it was actually the organizers' idea of BTC Prague. It wasn't mine. On the basis that last year, which was the first time that they ran the conference, they had Giacomo doing ordinals are retarded. And I don't know this, but my impression was that they were maybe a little bit hesitant about how on the nose that was. But then the talk was amazing. I highly recommend people watch that, by the way. It's very, even if you like ordinals, like it's still very entertaining. Like Giacomo's extremely
Yeah,
not only informed, but I think he's probably one of my favorite kind of speakers, I guess, like traditional conference speakers in Bitcoin at combining very dense topics, like whether technically or economically or historically, even in this case, with extremely entertaining delivery. So the talk is very good. I think they maybe felt vindicated by how well received the talk was. And they were like, cool. So we can like make a thing of this. And so they actually pitched it to me. They were like, do you want to do, I don't think they said Fiat is retarded. I think they would, do you want to do like something is retarded? And I was like, well, Fiat's pretty retarded. I could do that if you want to turn it into like a series. So, I mean, I'm kind of hoping that it becomes that now. Like next year, they're going to, well, I guess I will pass the torch to someone else and they can do something else as retarded. Crypto is retarded. Maybe that would be good. Like rounding out the trilogy. I don't know.
Got a whole series.
Yeah, but literally it was all reverse engineered from the title. Like the title was not my idea, or was at least only partly my idea. And then everything else was like, how do I explain this?
Yeah. Well, I mean, how are you guys viewing things right now? I mean, you guys are kind of head down focused on investing in the Bitcoin ecosystem. Do you guys even focus on the fiat system that much anymore? Or are you kind of like, this is baked in the cake?
I just don't have time. I'm sure it's the same for Eric.
Yeah. I mean, there's so many things that I used to focus on that I just don't have time to focus on anymore. But I think that there's, from the perspective of, if we're looking at a financial service provider in Bitcoin, there's a lot of overlap between understanding what has already been built in the traditional financial system, and how actual fintech solutions today work, because there's direct and ancillary forms of competition that sometimes these products can come into with that, depending on how they're being built. I think that there's areas like that we'll look into. I'm currently not. I'm focused more on fundraising right now, so I'm actually one of the least informed VCs, I would guess, because it's impossible to have time. But yeah.
Yeah, I just to echo that, like similarly focused on fundraising. I mean, just focused on the admin of running a business completely takes over your life.
Oh yeah.
But also, I don't know if people know. I'm not saying this to boast, but just to to give a bit of background that people may not know, because they just think of me as this like snarky squirrel, whereas I do actually have I'm a real person, and I had a career prior to all of this.
Not just a squirrel.
The prior to going full-time Bitcoin, I did the same for Eric. Like, I don't know if he even wants to go into his backstory, or similar for Eric, I should say. That I worked in investment management, like focused on public equities, and then even within that, my specialty was fintech and just like banking more broadly. So not to say that I am an expert or the expert on this, but I did devote a significant part of my professional life to understanding how basically fiat plumbing works, which is why I'm so mad about it in part. It's why it informed a lot of the Fiat is retarded talk. So I kind of feel, again, with emphasis on it not being the case that I have mastered this and there's nothing else to learn, but rather just, in the interests of time, I don't really feel the need to keep checking on what, as far as I can tell, is the same thing, which is fiat continues to implode. Like, I really like, for example, Lynn Alden's meme about this, that you can really just reduce all of it to the Breaking Bad quote / meme, like nothing stops this train. I do honestly, I kind of feel, I even alluded to this in the Fiat is retarded talk, that if you read, I guess now, gradually then suddenly, but in particular Ender's Game by Parker Lewis, you read that, you read Broken Money, that's everything you need to know. Like, you really don't need to spend any more, unless you want to. Like, if it is still relevant to your career, like it once was relevant to mine, you can track it day to day. But I don't think you really need to. I think you've got 90% of it by reading those two books.
Yeah. Nothing stops this train. But you have background in banking. Eric, you wrote an awesome, I mean, it's a pretty long report, I would say, on Bitcoin banking and kind of how you see things growing from there, I guess, or developing. And lately we've seen the big banks want to get into Bitcoin custody. You had SAB 121, and they were actually advocating, they were writing letters to the Treasury and other regulators, basically saying, or the SEC, sorry, and other regulators basically saying, hey, we want this. This rule is ridiculous. We want to hold Bitcoin on behalf of clients. And now I guess the SEC has relented and actually allowed certain banks the exceptions of the rule. And it sounds like we're about to see the large banks basically be able to custody Bitcoin on behalf of the clients. How do you see that developing? And did you expect this? And what are the significance of like these large banks starting to custody Bitcoin?
Yeah. So I guess a lot of my writing's been much more prospective and theoretical
Yeah.
on this topic
Yeah.
in terms of, I don't think my opinion would be particularly valuable over those who are just following it from a regulatory perspective. But it's, I guess what I think could be most interesting from a custodial standpoint is, I want to see how big the shared custodial market can become over time. I think we're just starting to scratch the surface around what that could be, and putting the licensing and everything that's relevant towards doing that intra banking system is fine. But generally speaking, I think that there's a lot of really novel applications that can emerge. This is something where, I think if you try to compare and contrast what you can do in Bitcoin with how the current, financial infrastructure works, there's a lot of very novel applications that either didn't exist before or the costs associated with replicating them in the traditional financial system are just so high. Creating some sort of shared custodial scheme in the TradFi world is effectively some type of either escrow agreement or trust structure. And a lot of these things are very expensive. And we effectively streamline that with Bitcoin, and you can create these automated forms of shared custodial models as a mechanism. And as more and more self-custodial or shared custodial solutions become more commonplace and grow, and I think there's still a large lag in that market, although it exists significantly today. That's something where I could see novel models of either community-based or organizationally based or jurisdictionally based constructions going that just aren't being applied yet because Bitcoin's still being adopted. But I think that yeah, I'll leave it at that.
Yeah, I'm always interested in things where Bitcoin can do something where Fiat can't, just because of the technology. That's always an interesting area for me.
I had an answer for that too, Sam, by the way, that
yeah, sure.
I realized this quite recently, and if anything, I was kind of embarrassed because like I should have put this together maybe 5+ years ago, but I've, as of fairly recently, become completely convinced that not only will eventually, I don't know what time horizon, just to be clear, it could be like 1 year, it could be 10, 20 years. So maybe it's not like super certain, but on a longer time horizons, it becomes increasingly certain that not only will every fiat bank in the world seek to custody Bitcoin, I think they'll also seek to sell it. I think they'll want to become brokers to their own clients. And it's for the following, what I now think I've realized is quite straightforward reason that, like I said, I'm embarrassed I didn't think of earlier, that basically the entire, just be kind of cynical and crass about it, the entire, fiat banking racket is based on the grave injustice of being able to print money, right? Which we're all perfectly familiar with. But to dive into the mechanics of just a little bit further about like why this is partly how it works, partly why it's so bad. This is how almost all fiat money comes into existence. It's commercial banks making loans. By and large, they will always look to collateralize these loans with real assets on the part of the borrower. And then obviously based on both the LTV and the general creditworthiness of whatever the borrower is either their own creditworthiness or the creditworthiness of the enterprise, they price the issuance of money in the form of interest by trying to balance all these risks. But it's kind of not a real market because they can issue as much money as they want to, right? They can just print fiat completely into oblivion, which they do. And this is basically Ender's Game, right? Ender's Game is saying that this is how this works. It's never going to stop. And then eventually you get nothing stops this train. So with that all in mind, this is what I think they're going to realize, that basically by far the best collateral that they can take against these loans is Bitcoin, which you alluded to, I think, in an earlier question as well. So it's a nice way to come back to that too. In order to guarantee that their credit counterparties even have Bitcoin, which, there's no particular reason to believe that, you can make it far more likely by selling it to them in the first place, right? So once this clicks for banks, they get the following. They sell as many of their customers as much Bitcoin as they possibly can. Then they print money to loan it to them for basically whatever. It kind of doesn't matter at that point, because if you're following the now very well established, I think originally Unchained, I'm never quite sure if I'm supposed to credit like Unchained at least made it super, famous and popular, like massively over collateralized, and hence I don't want to say completely risk-free, but like relatively risk-free for everybody involved, right? As a way of, there's all kinds of use cases for that. We don't need to get into it necessarily, but my thesis is fiat commercial banks will start offering this purely because they can collateralize it with Bitcoin and actually hope that the customer defaults, right? Because in the vast majority, there is still a little bit of risk involved. I was a bit facetious a minute or two ago when I said that, it's not like a real market. It kind of is a real, there's like a little bit of a restraint based on the absolute worst case for the bank, which is that they still can lose money from it, right? Like they can, if a loan goes completely bad and they have to like go repossess a house or something, highly illiquid, it's entirely possible that they will end up with less money than they at least hope for. I mean, maybe not started with, because again, they did just print the money, but there are better and worse outcomes. And I actually think that from the bank's perspective, complete wipeout for the customers such that the Bitcoin can immediately be reclaimed is genius, because it's actually by far the cheapest way for the banks themselves to acquire Bitcoin long term, right? They don't need to, well, they could just buy it themselves, but why would you buy Bitcoin when you can just print money, give it to, like, loan it to someone else against Bitcoin that you've sold them, so they have, hope they fail, and then take their Bitcoin. So this occurred to me quite recently. I think it's going to occur to every fiat bank eventually. And in order to speed up the process of accumulating Bitcoin this way, they're going to also have to sell Bitcoin to their customers. So that's my thesis as of, I don't know, a couple of weeks ago or something.
Yeah. Eric, anything to add on to that? Are you good?
Yeah, I agree. I definitely think that's going to be a highly appealing incentive. When you break down all the different qualities of what makes something good collateral, Bitcoin is superior in many of them. And I think that narrative is going to proliferate with banks as well over time. Which
why? Can you just go in a little bit why it's the best collateral, just real quick?
I think what's really interesting, like there's the ability to create, you can eliminate rehypothecation risk in how you structure it. It's something that's a highly liquid asset at this point, and I think that's probably. In terms of, not to go too far off topic, but when people make arguments about the dollar is going to fail and something else is going to take over, it's going to be the yuan or it's going to be Bitcoin or whatever it is. That's the primary characteristic about the dollar, is just it has the deepest and most liquid capital markets in the world, and that's just this massive network effect that is very hard to usurp. And I think that gold also has very deep and liquid. They might be expensive and high friction. There's high transaction costs, but there's a high degree of liquidity, and they're relative to other assets. So Bitcoin is something where the scale of Bitcoin's liquidity has grown rapidly in a 15-year time span, and that's going to continue to grow. And I think that when you look at some of the functionality around rehypothecation, when you look at its liquidity, the trustless nature of an immutable supply, not to go into, and harp on a bunch of the other qualities of Bitcoin that we hear all the time, but it's something that can be created as like the ideal for a lender, to know that they can trustlessly make some sort of margin call on that Bitcoin, and that there will be depth in the capital markets for Bitcoin at that point. And that, there's an immutable supply schedule that collateral is following.
Got it. Well, yeah, I mean, I'm excited. I'm excited about those products developing over time. I feel like we've seen that kind of grow over the last 5 years, but nowhere near where I think it's going to be. Bitcoin as collateral, pristine collateral for lending. I think these banks are going to wake up to that fact, and I think you're just going to see that over the next 5 to 10 years really grow rapidly. Well, a couple of things happened over the weekend. Maybe we could touch on them. The first one was England completely botched it at the Euro Championship. Let's go there, man, because when we were together, it had just started. It was like the first day of the tournament. You were watching Scotland.
Yeah, that was pretty rough.
Yeah. We were at a bar in Prague, and that was my first.
A bar full of Germans.
Yeah, that's right. Yeah, that was bad. That was pretty rough.
Yeah, man. But then you told me, you were like, England actually is a pretty good team. Now they've never won the Euro, and I was like, I don't know, man. And they got to the final, and they looked just.
I kind of feel
man.
like that exact statement is still vindicated, because my summary of their whole the debacle of England's performance in the Euros is that they have an amazing team on paper, but they just can't play together. And I don't think I'm really qualified enough to blame. Oh, it's very fashionable to just blame Gareth Southgate, just say that they're badly coached. Not that I could necessarily coach them better, but I feel like certainly somebody could, right? So start the tournament. I mean, they were favorite. Well, you got to take that with a pinch of salt, because it's all English people betting on it that makes them the favorite in the first place. But they were the favorite on the basis of it's a team full of superstars who, as it turns out, can't play well together. And they shouldn't have even they had the most ludicrously easy draw that they still very nearly managed to lose every single time. I'm grateful they did eventually lose, and now it's over.
Okay, so I don't follow soccer at all, but that sounds very comparable to the mid to late 2000s Denver Nuggets team, which was just a bunch of superstars.
You're a very niche audience with this. Right?
We had Allen Iverson, Carmelo Anthony, Marcus Camby, J.R. Smith. We just had this superstar lineup. And they're all the most selfish players in the game, and they're just horrible together. We would still make the playoffs because they were that good, but it was just hard to watch.
That was my biggest critique of Carmelo his entire career.
Totally.
That's why he never wins, man.
Yeah,
that's why I didn't win. He wasn't he had too big of an ego. Maybe
totally,
Bitcoin. Yeah, he would have humbled himself a little bit. Maybe
then you show up and my favorite in that group to watch was J.R. Smith, because he was unabashed and he would just shoot 25 3-pointers in the night and miss
fadeaway 30-footers. Yeah,
they'd just be horrible shots. But then the nights in which he was on fire, I think he set the record for most 3-pointers in a game. And the nights that he was on fire, it's all worth it. When I think he made 13 in a row at one game we were watching, and it was wild, man. I love J.R. Smith. Man,
I just remember him recently when he totally forgot the shot clock that one game.
Yeah.
The championship.
Yeah, was that a finals?
Yeah, no, that was the big game of the finals or something. He just completely forgot that. Yeah, LeBron was not happy. But the other thing more serious that happened was the assassination attempt on Trump, and he's speaking at the Bitcoin conference next week, and I feel like things it's going to be pretty crazy down there. I think
that's my main takeaway from all of this. As if the security at Nashville wasn't going to be bad enough. What is in store now? Do you even want to go? You just skip it that day?
Yeah,
everybody's been making fun of Tatum turnout for the bulletproof vest, but now it's actually going to make a lot more sense.
Yeah, well, let's hope nothing happens. I'm just very curious to hear what he's going to say. If he says something significant, I mean, these are like politicians. They promise things, but it's going to catch every single headline in the mainstream media, like Wall Street Journal, Bloomberg, and this is not, there's been other politicians that have come out, senators, but this is arguably the most famous politician in the world, maybe even person in the world, who's headlining a Bitcoin conference. It's bonkers to think about.
This is going to be the most heavily marketed, or I guess the most visible Bitcoin event probably in history, is where I think.
Yeah.
That's wild.
Yeah. And what do you think of, do you think there is any kind of tie to a Trump increased probability of a Trump victory and Bitcoin? Do you think the market's actually looking at this and saying oh, if the Republican Party wins, then that's good for Bitcoin? I don't know.
This is exactly the kind of thing that I'm actually kind of great
You don't have to. You never have to think about it.
Totally. Yeah.
Yeah. Are you guys?
Again, I realize there are people whose job is to think about this, but I don't envy them.
Yeah.
Right. Are you guys speaking at the conference?
Yeah.
Yep.
Cool.
So I have to go.
Yeah.
What's like the topics? What are you guys getting into?
So I'm on. I'm moderating a panel about. I forget. I should know the title of it, but it's basically about Bitcoin, Bitcoin financial services, and like Bitcoin integrating with capital markets. Some pretty cool people on that one, actually. I think it's Nick from Casa, Drew from Unchained, and Mike Belshi from Bitcoin.
Oh, wow.
And then a bit later, I actually don't remember what order they're in, but I'm also on a panel with other Bitcoin VCs. So very well tied to this chat. Probably say all the same things. So don't come if you've already listened to this. I've given all my talking points.
I'm doing an eCash debate panel, which I'm very excited for.
I saw that. That's cool. I'll try to make that.
Yeah.
Who's that? Who's on the other side of the debate? And what's
it's Seth for Privacy from Foundation Devices, Ben Arg from Ellen Bits.
Yep.
And then myself and Cody Lowe from Fediman.
Oh, okay.
Yeah.
Do you have a position you're going to take? I don't want to spoil it, actually. Maybe people should just listen to your talk.
Yeah. Well, no, it's just things that I've talked about. That a lot of the benefits and costs associated with eCash changes based on the scope of consideration that you look at the technology from. And I think that the more technical crowds that are critical of it have a lot, they have more of a micro technical view, and their criticisms emerge from that. Having a more systemic economic view can illuminate benefits that you otherwise would not consider. And those are some of the arguments I try to make.
Cool. I'll try to catch all your talks. It's probably a good place to wrap. Like, always enjoy talking to you guys. It's always fun. Learn things, laugh, have a great time. But you guys mentioned that you're both fundraising. So where can people learn about your funds to learn about what you guys are doing?
Yeah, just go to our website.
Read you like a 3-paragraph disclaimer about how we are not soliciting funds. But should you want to learn about my business, which is distinct legally, I guess it's just a website, right? So, well, on Twitter, it's Axiom BTC. It's AXIOM BTC. And then the website is AXIOMBTC.capital.
Yeah, then our website is epochvc.io. So EPOCHVC.io.
Yeah. And check out these guys' books. 2 of my favorites. They're both on my bookshelf. Bitcoin is Venice, Seventh Property. Awesome books. So go check that out. I think they're both on Amazon. You could probably get them, right?
On Amazon. If you want to pay in Bitcoin, you can get it directly from Bitcoin Magazine too, because they published it.
Yes. Yep. Excellent work, guys. And I guess I'll see you in Nashville. Appreciate it.
Well, kind of. Looking forward to seeing you, not looking forward to the cavity searches.
Yeah, well, maybe we can go to side events too. Just grab a beer together or something like that. How about that?
Yeah, I'll be hopping the side events pretty heavily.
Yeah, right on, guys. Well, thanks for coming on Swan Signal. Appreciate it.
Yeah,
and have a good day. Yeah.
Thanks for having me, man. Later.
I hope you guys enjoyed that. I just find Bitcoin venture investing to be fascinating. I think they have a really cool job because they're speaking to the actual builders and providing their expertise and capital and really helping to grow the Bitcoin ecosystem. So it's always an interesting topic for me to go into. And I hope you guys enjoyed it too. I want to bring up Pacific Bitcoin. Of course, that's the festival that we put on in Santa Monica, October 18th and 19th. Go to the QR code here. If you use the promo code SIGNAL, you can get a deal. And as well, if you get Bitcoin, you can use another 21% off. So that's 31% off if you use the promo code SIGNAL and pay with Bitcoin. Another one is the Pleb Party Nashville. We spoke about Nashville. There is a Pleb Party being thrown by Anders that we're sponsoring. It's a 12-hour party, basically. Amazing venue, open bar, free food, great music. So grab tickets now at plebpartynashville.com to lock in that lowest price. And I think we'll see a lot of you guys there. I hope so. So thank you everybody for listening. Always appreciate it. Like, support, subscribe to the YouTube page. That helps us get the Bitcoin message out. And got another great guest lined up. I think we have Fred Thiel coming on next week. We're going to discuss Marathon with him and all the developments in Bitcoin mining. So make sure you tune in there. And I will see you next week.